Hello and welcome back to Dukes Copy TV. Each week we're joined in the studio by the financial newspaper Agefi. Nicolette has joined us once again today, so over to you, Nicolette.
Quantitative easing, LTRO, central banks have made a lot of liquidity available to banks. Yet this liquidity is held on bank accounts with the central banks. The banks aren't lending. Is it because there is no demand? Is it because the banks are unwilling to lend? We have asked Dan Morris, global strategist at JP Morgan, to give us the answer. Dan, welcome to Geneva.
Thank you.
First, tell us about the monetary supply. How large has it become?
So when we like to discuss quantitative easing, what we tend to do is to look exactly at that, at the money supply, as opposed to the balance sheets of the central banks, which is what a lot of people use to illustrate quantitative easing, but it's not a terribly intuitive concept what a central bank balance sheet should look at, or should look like. So if you look at the money supply, this is kind of the effect of quantitative easing, because fundamentally what a central bank is doing is buying securities, be they treasuries or gilts in the UK, and creating money to pay for those securities, and so that money goes into the money supply. So if we look at base money in the UK, in the Eurozone, in the US, we see that it's increased anywhere from 2 to 5 times since we've had the launch of QE.
So you have observed that in spite of rate cuts and in spite of this enormous amount of liquidity, banks aren't lending. Why is that?
Well, exactly. So what you want to have happen with the increase in liquidity from quantitative easing is for that money to make its way out into the economy, that exactly banks do begin to lend, and that supports growth. What we've seen instead is largely that banks have kept this money in reserve most of the time actually with the central bank. So they've essentially taken the money from the central bank and to some degree given it back to them to hold for them until they feel that they need it. And I think there's 2 reasons why we've seen such low loan growth. On one hand, of course, there's a question of demand. We know we've gone through a period where there was excessive credit and loan growth prior to the breakout of the crisis. So there's a question of how much consumers and businesses really need to borrow at this point. And then secondly, for banks themselves, they're dealing with the burden of rebuilding their balance sheets. They have a lot of regulatory pressure, profit pressure. So they're maybe not quite as willing or able to lend as they would normally be. So instead of seeing a big increase in lending following this liquidity, instead we've seen just an increase in reserves and actually negative lending growth within the Eurozone.
Well, Mario Draghi has actually noticed this and mentioned it during his conference. What can be done about this?
Very good question. I think if the central banks knew what to do about it, honestly, they would have done it by now. I mean, we're in this environment where we have a lot of unconventional measures from the central banks because the crisis has been so severe, in a lot of ways unique, and so they're trying to come up with creative ways since the traditional responses of central banks, for example, just simply cutting interest rates, hasn't been enough. You've seen an effort from the Bank of England with their funding for lending program, which does provide liquidity to the banks on the condition that they do lend it out into the economy. And it remains to be seen how effective really that will be. It again goes back to the question, if there's not really demand, if companies aren't seeing economic growth, if they aren't seeing their customers asking for more supply, then why do they need to invest, and therefore why do they need to borrow?
But why are consumers deleveraging? And is there any chance that they will start borrowing again?
I think really depends kind of on where you are exactly. In some countries, clearly there was a huge increase in mortgage debt, particularly in Spain, in the UK to some degree, and in the US, less so in other parts of Europe. So in those instances, that debt burden, and especially relative to the value of the homes they probably purchased with that mortgage money, it's going to take quite a while for those numbers to come into balance. So it's not so much that they need to deleverage so much as they need to wait for hopefully the value of the homes to equate again with the value of the mortgage. On the other hand, you also have consumer lending for, say, credit cards and other purchases, and in that respect, again, they do need to pay down that debt. They have been doing that. It's been helped by the low interest rates, of course, provided by the central banks, but it's still a relatively low process. I mean, income growth, of course, hasn't increased dramatically, so people still are more or less earning what they earned before, or perhaps even less. So it takes a time to pay down that debt, and that's why we expect relatively low growth rates in Europe for the next several years.
Dan, thank you very much.
My pleasure.
Thank you for coming here.
Thank you to Nicolette and her guests for that very interesting interview. Make sure you click back to the Dukascopy website for more interviews and updates.